Yo, mic check, 365. Shake my hand, everybody. Shake my hand. Good afternoon. Welcome to our Traders War Room. I think we are like 59. War Room number 59. Between since I started doing these, which was late last year or middle of last year, into definitely this year. Remember the war rooms, we're tracking swing positions, big positions. We're trying to see what the market is going to do this coming week. And a lot of it translates into the future. Just give me 2 seconds. I would just quickly love to share the link to our public Telegram group. I did not do a good job of advertising the fact that I'll be doing a war room this Sunday. Although, please note, generally speaking, the only announcement I should make is if I am not going to do a war room. Otherwise, war rooms are supposed to happen every single Sunday as long as I'm around. So I shouldn't have to kind of like build up some marketing kit. So I do apologize for the short notice, but we are live. If you're watching live, can I just get a mic check? Happened to me twice this week where I just started talking and there was no audio for at least 5 minutes. And then we'll get started. So I'll just give it another 60 seconds while I wait for a mic check, and then we are going to get started. Hope you guys are doing well. I hope your weekend is good. Talk to me. Let me know how you are doing. Let me know how you're doing. I've got my own set of assets I'd like to look at today. Fundamentally because I haven't looked at them properly in a very long time. Really, I've been just like taking short-term trades with the morning group. Swing trades have not really been a point of focus. I keep telling myself I'm going to quickly review the markets, and I never get around to it because of time. So right now we are getting ready to get back into that. It was a crazy week without my team this past week. That's why I was slightly all over the place. But yeah, I'm very, very much excited to get back into to the root of things with my team reporting in tomorrow. Something sad happened in our academy, but such is life. Right. So cool. Thank you so much for the audio check. I appreciate that. Right, guys. So a couple of things just before we get started. Number one, we'll see with the headlines that we're going to look at today, but Putin and Zelensky might be doing a face-to-face negotiation. Face-to-face negotiation to me, I mean, I am no war expert, I am no geopolitical expert, I'm just a microeconomist, and also I hold a master's in social sciences, and so I really don't really know. But to me, a face-to-face negotiation could be the beginning of the end of the war. Obviously, Putin's going to have crazy demands. One of them is going to be something to do with the West, no interference with the West, which is fine, and a couple of land grabs here and there, and territories, and all that other complicated stuff, right? But my point is, if that happens, we are going to get a crazy rally. All right. So those of you who are always paying attention to market movements, always looking for something to trade, be aware, right? Don't be caught, number one, on the wrong side of the sentiment. That's why every morning, or at least when I can, we have these sessions, right? Don't be caught on the wrong side of the sentiment, because that's a very big thing, right? If markets get the gist or the idea that the war is coming to an end, there's going to be such a strong positive sentiment. So your risk sensitive assets, right, are gonna go wild. Anything that was beaten down because of the war will recover. I'm not saying that's what's going to happen. I'm saying in the event it does happen, it's something to look out for. All right. So that's my take on the week. Right. Ukraine appeals to Russians and warns of a third world war if ceasefire talks fail. You remember they've done this like 3 or 4 times. Right? There've been multiple ceasefire talks that have completely failed. Leave it up to the plot at B. Right. So how did the week end? Right. Euro futures closed a little bit higher. Actually, it's their best weekly gain since 2020, right? Markets have been through a lot at the beginning of the year. I mean, I don't want to toot my own horn, but we spoke a lot about this in January, right? We spoke a lot about crypto, that we're not going to do an all-time high as quickly as people thought we were. We spoke about, the crash of the NASDAQ and US equities long before the war, right? A lot of people have forgotten that markets were falling long before the war, right? In our pre-market open, what we're dealing with today is we still have oil above 100 US dollars per barrel. That's not good. The 10-year treasury, I don't want to get into that because that's a whole mouthful that I already did a good video for you guys, by the way, on Bitcoin, cryptocurrencies in general. I did it last night, so my team will quickly put some edits, snap scenes together for you guys. Hey Samuel, good to see you, brother. And then I'm sure the video will be uploaded on the channel tomorrow, right? So I did it last night. And I do refer to a lot of important things in there, so just look out for that video. Right. S&P, closed a little bit up. Nasdaq did very, very well, very, very well for itself. And we're gonna quickly look at the Nasdaq chart. The Dow did okay. Our gold, the last time we checked, was at 91933. Now we're a little bit down to 1921. And you can see some minor auto corrections across the metals. Nothing right now for me to actually make a good call on, right? You'll see our Russell really has ranged between 2050 up to about 2100. Nothing has changed, but check your fear gauge index. Those of you who attend my morning sessions, you'll know this number was above 30. I said it was screwed. Then it was 26 the last time we looked. Now we're trading, the fear index is falling at 23, right? People are loving this idea of talks, right? They're also loving what the FOMC said this past week about the big gestures of the economy. Across Europe, we've got the Bank of England and the ECB, like really making aggressive stances against inflation, right? And to be honest with you, I could back test it if someone paid me to. I don't have time to kind of like look through that data for fun. But as far as I can remember, every week after a big FOMC meeting, the markets are very chilled, calm, and collected, right? So there's kind of like a lot of things being put together here, right? So fear gauge is down, right? You've got your Dow finally rallying in best week, even for US stocks, best week since 2020. Doesn't mean we're out of the woods, but it's just something to kind of like look out for. For the crypto markets, Bitcoin crossed over, over the 40. All right, this is big for Bitcoin, right? Bitcoin is this weird puzzle right now. It's not making lower lows, but it's also not making higher highs. It's in a range. But Bitcoin Cash has crossed over back to positive 3 something, right? It's something to very look into. It's a good market to trade and hold, right? There's a lot of room in this market. XRP getting closer back to $1. So overall markets are living the dream, right? So I want to spend like 10 minutes, if not less, on sentiment, and then we're going to look at the assets that I put down there in the description below. If your index finger works, give it a good stretch at some point in time during this video and hit the like button. I would appreciate that, right? So investors come off a strong week looking for more gains, Who investors? Who do you want to be? You want to be a billionaire. You want to think like a billionaire. They are looking for more gains now that they have some clarity from the Fed, right? So this thing, I've covered it, right? It's clear, right? North Korea fires multiple rocket launches. Man, I'm just over people trying to kill people, right? So not much going on there. We'll come back here where we will start our war room today, but let's just quickly check on the crypto market cap, right? Overall, we're still, I call 195 trillion dollars on crypto markets good, right? It's a good range. Remember, the biggest contributor to the crypto market cap is obviously Bitcoin, right? And as long as Bitcoin is trading above 40,000, to me, it's a good sign. We're still in a bear cycle in a bullish market, right? We'll see how that goes. Ethereum did stunningly well. You can see, the stuff is there. Bitcoin went up by 6.9% this week, but Ethereum almost doubled that. Really, really good buys at 2.1 for those of you who held the last time we spoke about this. Yeah, man, there's really not much going on in the space, but I have covered a very good video that you guys will see hopefully sometime tomorrow, although it's a public holiday this side. I'll be working though. Right, so now when will the Canadian dollar break the 9-month range? Amen, right? USD CAD has traded between this range for a very long time. Is USD CAD one of the charts? It's not one of the charts we're supposed to look at today, but this has been an interesting war. CAD fundamentally should have been weak, but because of oil, it wasn't. during the weeks when dollar was absolutely strong, up until dollar hit a governing supply. And so now you've got the situation where markets really want to know. It's been 9 months. What's going on? Right? This is not a nice trading zone. 1, 2, 3, 4, 5, 6, 7, 8, 9. Right? So this whole area here, if you look at where the candlesticks close, open and close, open and close, you will see, right, that price has been in this box range, right, from last year July into here, never breaking out, never breaking down, right? So it's been an interesting journey for USD CAD, right? But I did speak a little bit to this market on Friday during the New York session, so I won't waste too much time on it today. We'll just stick to the charts I have. Otherwise, we never finish the job of the day, right? Forex Live news: risky rally continues as hawkish talk shrugged off, right? Risky rally, risk rally. What's that? Risk sensitive assets like your equities, stocks, Nasdaq, Dow, Bitcoin, crypto, anything where if you invest, there's a higher risk of losing all that money. Check Nasdaq. I mean, I found this rally particularly interesting, right? So, on the governing time frame, we would not be too surprised. This demand here did its very best to hold price. We do have a bearish engulfing structure up there, but we'll talk about that another time. And so I want us to just be in touch with Friday. Let's look at Friday. So I'm going to switch to the 1 hour time frame, right? So we covered a lot of this. This was FOMC, right? This drop was because the interest rate hike went up 0.25 basis points at 8 p.m. This was on the 16th of March. I suspect a Wednesday, if I'm not mistaken. Yes, this past Wednesday. And while FOMC was talking, which is why I always say, unless you know what you're doing, you want to trade in line with order blocks. Here was a nice demand. There was a lower demand, price went there. But more importantly, stocks heard the expected interest rate hike. But when Powell started to talk, he started to talk about economic growth. He shifted the sentiment. He shifted the sentiment with what he was saying. He moved the market, right? And this is the language, right? So I will be covering these talks. By the way, I don't care about any FOMC meetings. I don't care about any FOMC meetings until September. I'll cover the ones between there for everyone's education, but I want you to know the next big move is in September. Why? Because Mans told us his plan in the previous one. He said, look, man, I'm going to look at the peak, and I think we're going to peak in June, July. If we're peaking in June, July, then I want you to know the only CPI reports that matter are reports like July, August, September. We need to see inflation start to drop in July, August, September. When we get 3 consecutive reports of a drop in inflation, you guys don't know what I'm talking about. Those of you who follow the channel in Forex Factory, there's always CPI data 1 week after NFP. So when that starts to drop, I don't care about what's going to happen in March. I don't think we're going to get a rug pull. I don't think between now, March up until June, July, August, let's call it July. Between now and July, I don't think we're going to get 0.50 basis point in any Fed meeting, all right? And if they do, that's fine. We'll adjust our plan. But according to what Powell said, I don't think so. I honestly don't think so. But guess what? I covered all of this in the crypto video that I keep referring to because that stuff is absolutely important for investors, right? So those of you who, this is kind of like the video you want to watch before you start to dollar cost average into the new assets I've put out in the Walton 3 Years Club, right? So everything is dropping this week, but that video, please watch that video first. If my videos are too long and and you're too busy with your life, whatever, make time for that one video because you need to understand where I think markets are going from a macroeconomic analysis for the next 3 to 5 years. Right. But anyways, you can see from FOMC's talk, same day, Wednesday from 8:30 p.m., right? Nasdaq has been in a beautiful bullish rally. This was our target. For those of you who attended the London session mornings and those of you in the private Telegram group when I sent those screen grabs on Wednesday and Thursday, right? Personally, If NASDAQ didn't go above this line, I would not have been surprised. So I was very much pleasantly surprised to see markets rally all the way up there, right? So let's just quickly start off with NASDAQ in terms of signals, and then I can move on, right? I am not yet a believer. You know, it takes a lot to convince me otherwise. I do know that the markets absolutely need this recovery, all right? I get it. I get it. 28% down in a very long time is a big deal for the markets, right? Markets have been down since November 2021. If anyone tells, I saw an ad the other day telling people to join their course and trade Nasdaq that's been up for the last few months. And you know, a lot of people will. It's unfortunate, right? But this thing has been dropping since November, right? So for me, as a macro trader and a swing trader, number one, and someone who consults around what investors, and I'm bringing this up because I want you to understand long term makes more money for me. I'm not a scalper. I don't see a trading position and I put in 55 orders in one go, 55 buys, hoping to make a big buck today, because I did that before in my life and it just never worked for me, right? I lost a lot of money many times, right? So when I look at NASDAQ, it's clear, it's very clear that we could have a good rally, right? The last headline we just looked at is risk rally continues as hawkish talk is shrugged off, as the 0.25% interest rate hike was shrugged off, as the FOMC kept saying, look, man, I don't think there's a need. I don't think recession is coming this year, maybe next year. I think we'll have inflation under control. We're going to bring it down. As he kept doing all of that stuff, market responded accordingly, right? Okay, Powell, we got you, right? So if this is the case, ladies and gentlemen, when I draw a trend line and my trend line gets broken and markets decide for themselves when to hit a rally, and when they leave to break a trend line, leave a strong order blocks, most of the time, not all the time, but most of the time, it signals a long-term plan of a market reversal. It's not a retail trading strategy reversal where you're looking at a morning star or a bunch of candlestick patterns. I'm saying, generally speaking, markets, when markets do this kind of behavior, they are preparing for a rally. If the first target, which was our break of market structure, has now been broken, then we're going to have a few bus stops along the way. We are at one right now, where markets are going to have to decide how they want to open. But if markets do a good job, and I told you guys this a long time ago in one of our previous war rooms, that I'm looking at 15,000, right? If indices can back, if NASDAQ, can get back to about the 15,000 level, then okay, Leroy is a believer, all right? I don't mind buying short term now that there's a clean rally, right, that we can feed off. Right. But in terms of my swing trades, I had a beautiful swing sell from last year until sometime in Feb. Right. So in terms of that kind of stuff, because I'm not in this buy right now, this long-term buy, it's very difficult for me to commit capital as a swing trader. As a short-term trader, this is what I'm looking at, right? So maybe 1,500 is just being kind, right? If markets can close above there, right, it is near damn obvious. So 15,300 should be our target. It is near damn obvious that markets are going to try and retest previous highs. Now, I don't necessarily I think, that's going to happen quick, fast, and in a hurry, right? Unless if smart money is determined to push markets up there. We will need a lot of things along the way. We'll need energy prices to recirculate. We'll need war to come to an end. We need those things. The market needs those things to pull up, right? So please, if you're buying, if you're in Friday's buys, the last trade I took on NASDAQ was a sell, I think on Thursday, on the 1 hour time frame that I shared in the public group. But if you are trying to buy or already in a buy, dealer's choice, but look very carefully around here. Because price has left a serious unfilled order block on the charts. Personally, for me, I would be looking to buy here, but I'll be looking to buy here with sentiment on my side. I'll be looking to check when markets come back to about 13,300, what the plot is. All right, so 13,300, and I want a clean range of about 25 points. So that's 1325, 1325, 1330. Right, so that's my area of competition there. I'm gonna redo that. Please. I'm terrible with private messages. I see I'm starting to get a lot of those again. I don't mind them, but I am terrible with them. Right? And the reason for that is, I get run down on time, right? Especially, we've got a good private group where students consult each other most of the time. I do try and chip in every now and again, but really it's a good beehive mindset, right? So if you want the best of both worlds, take the course and kind of like grow in a hive. I won't answer questions. So price might come back here and I might change my buy in mind. That'll only be because of sentiment, right? So 13,300 is fundamentally as a swing trade entry. If you want smaller accounts, my smaller accounts for indices, I am always talking to you. I'm talking about anyone with $1,000 or less. You might want to wait for a deeper pullback, knowing that you're running the risk of not being tagged. All right. So this is what it looks like on the H4 time frame, 13,300, and I'm going to go to the 2-hour time frame as my last time frame. Yeah. So as a swing trade, I'll definitely have a buy on the daily and a zone outside. It's going to cost me a lot of money to hold. So it better be worth it in terms of sentiment. So this whole area here is about 400 points. This is not for small accounts. I repeat, my first swing trade idea is not for small accounts, right? If this works and I get triggered, I will have a bigger lot size somewhere down here, which is where I think small accounts should wait, right? So anyway, between 13,100, somewhere down there. Maybe let's give you an area of competition that makes sense. What are we on? 13,100. Let's see what 13. No, that's way too low. Just give me 2 seconds, guys. 2 seconds. Yeah, you have no choice but to wait around 13,100, right? So just maybe subtract 25 to 30 points. So 13,075, somewhere up there would be a better place to spot and hold, and then see what happens, right? So this is for swing trades. Intraday trades this week, price left a lot of market inefficiencies. The strongest market inefficiencies are the ones that remove an opposing order block, that will take out an opposing supply or break structure, right? So for short-term intraday trades, you're looking at London session, Asian sessions pulling price back. There's one here that you want to look out for and give it a try. The only reason why I don't like it is because that is the latest demand on the charts, right? And it's the latest demand on the charts, number one. And number two, we also need to find some type of confluence. We're on the 2-hour time frame, which is good for small movements, but we really need to find some type of confluence with a higher time frame, right? And then the next one, which feeds into the same one, is hella big, very big. Find seriously a bigger area of value, right? So I would, me personally, being me, and choosing places of price that half the time leave me unwanted, I would wait here where markets actually broke down the downward trend line. But this is also a good place to risk. So just risk wisely, risk very wisely, right? So the first one is this level here, 1,400, right? Plus an extra 25 to 30 points, puts it at 1,428. You gotta love how accurate our trading strategy is. Those of you who know, 1,100 is where I would be for a better price movement, right? The only problem with this one is this long wick, the hidden demand, right? Because of the hidden demand, there is no range. Remember, the hidden demand took out a short-term demand somewhere here. If I go to normal candlesticks, when the FOMC was talking, right? That's the only reason I don't like it, right? Market, because technically speaking, then my stop loss would have to look like this. So this is quite a big risk that I'm taking. I'm assuming this hidden demand will get filled. I'm just hoping it doesn't get filled when I'm in the game. Right, so I've got 2 areas for intraday trades on NASDAQ, 1 big area for swing trades. Now I look for confluence. I'm going to start on H4. H4, we've got confluence with the first area of value. I want to tell you once again, it's quite parabolic. It's a very steep climb, explosion. Good for taking retail trades, but just watch out, right? Just watch out for this. Also, be very wary. Most of these movements I'm pointing out, you want them to happen by Tuesday. You want price to come back here before going up there, all right? Because up there, if I'm right about my zones, about the 1,500, if I'm right about this entire yellow area, look at this, a completely unfilled sell order all the way up there. If I'm right about any of these zones, and then imagine the amount of sell force you might be facing, right? So be very careful. We're drawing that tight, right, for now, but it's suffice to say the sell area is quite thick, right? So you don't want, it's not that you don't want, it's just that it's so much more risky when prices coming directly from a supply into these areas. It could still work if markets are really bound for the moon. If investors have started to pump money back into risky assets, and you'll know. How will you know? You look at charts like Bitcoin. Why? The crypto markets don't rest. So it's weekend and they're pumping. They're coupled with the stock market. You can almost see direction. If Bitcoin tonight removes another supply, a fresher supply, you will know that Nasdaq has more room to move tomorrow because investors are starting to feel the markets are safe again to pump money in, right? So needless to say, 1, 2, I'm very happy, very happy to wait down here. Maybe I might even micro adjust this H4 area, right? I wanted to buy at the top there. I'm starting to think, well, why not just get that base, get 13,700 instead, right? So somewhere here is where I would want to buy. But if you follow my very conservative way of buying, it also means you might not get filled because markets might turn there, right? I could have a small lot size here or nothing at all, but I'll definitely want to try and take a risk and buy here, retest this trend line, retest that order block. It is an FOMC level after all. And then if this fails, then it means all roads lead to a potential swing trade, right? So that's me. Remember, we all trade from different perspectives, and I've never really said this before. Even in the intraday classes, I choose levels that offer me the most or the best probability. That means for someone like me, maybe, and I don't want to come off snobbish because I understand how this game is played, and everyone wants to be a millionaire, and everybody has a flashy car and a big house because of Forex. I just want you to understand my psychology. What you need money for and how much you need in your life today because of the pressing things today in your life might not be what influences me to trade. So because of that, I might, because I've been trading for a long time, because I'm big on investments, because I am only looking for perfect setups, because most of my take profits in this financial quarter during the market crash have been trades that I took a year and 2 years ago, I might not be looking for money as hungry as you are, right? So that's why sometimes I mark up different levels and I explain why I'm taking them, right? So take my areas of value, knowing my psychology, right? My psychology is I know the markets can't help me today, but I use them to help me and to build a tomorrow, right? So I never trade for today. And some of you might need to get that definition clear in your own trading psychology. If you're trading for today, you're an intraday trader, and you need to really watch for quick turns. But you're also easier bait because you get lost in market day-to-day volume, right? If you're a swing trader like me, well, then you want the mess to happen, right? I mean, look at the gamble I'm taking on Nasdaq, right? I'm literally saying I don't believe in Nasdaq. And look, there are two good demands. This one is definitely going to break with this one here, right? So I'm going to mark this red because I don't want anyone to say I didn't tell them. This one, the red one that I've just marked up, the parabolic one, ain't no way that's a safe place to buy. It could work if you let it. So there are these guys, BMT traders. We'll talk about these things one day. I think one of them is actually in our group. And what those guys do is a lot of them, I don't know if people know this, like it's an old group, it's not old. It's a school of thought that's very much married to ICT trading. Now, what happens is these guys are always watching charts. So a level like this works for them because they first have one of their confirmation rules have to watch how price arrives and leaves. So a very good BMT trader is probably on the 50 minutes, 5 minutes, 1 minute chart, watching how price will arrive in this red zone. So markets could easily break this area of value, right? Why? There's a lot of liquidity here, obviously. And then markets bounce off a better demand, a lower demand. And as it goes up, markets will probably form another bullish engulfing candle or whatever weird confirmation signals they use. And then they'll start buying up here, buying in billions, buying not in billions, but buying multiple pending orders, 0.1, 0.1, 0.1. It's like, can you just count and just have one order 0.10? I don't know why. I think people think it's cool. I don't know. Whatever it is, right? And then they buy as markets are moving, right? And then they put their stop loss, and lock it after prices gain momentum because they're watching charts. If you're a sit and forget trader, if you're working full time and trading part time, trying to buy yourself into trading full time. If you forget to come back to this chart on Monday or Tuesday, markets will trigger you because you put your pen in order here, your stop loss is there, take your stop loss and leave with you. All right, leave without you, sorry. So you'll say, but some people made money from this area and I lost money in this area. It's because there are 4 types of traders: scalpers, day traders, swing traders, positional traders, and we're all doing different things in the same market. So you need to understand your perspective, what you're doing as a trader, what type of a trader you are. If your life is busy but you still need the money, then I suggest you do what I do. I look for quality setups. I have to think about it logically. This is a good demand, but the problem with this demand is there's also an equally good demand below it. What would smart money do? Would it not buy low? If it buys low, why should I take the first demand? You're taking the first demand because you are desperate, because you feel like you're going to miss out, because everything you understand about money and markets tells you that if you don't act now, you're going to be left behind. And that's the trap. That's the algorithm trap, right? And the algorithms left this area of value. They left explosive, enough for you and me to convince ourselves that this is a good play. Would you take this buy here, down here, even if the supply wasn't taken? I wouldn't. It's too close to a supply, right? All the sellers are in here. We know this is a structured imbalance. Even if the supply was not broken, my brothers and sisters, if this market closed here on Friday, right? So if this is how the charts were in front of us, right? This is why we do these war rooms on Sunday. Never mind. I was going to do this. I would absolutely not take this buy. It's too close to a supply. I have to assume all the sells in this area are strong enough to break at least one of my demands, right? This is not the case. Price has already removed this area of value for a supply. Price didn't even think twice, right? Anything behind our broken market structure, when it's now time for a market reversal, does not stand, right? So we really are trying to see if there are any fresh levels to consider. Really, to find them, would have to investigate that 15 minutes, 5 minutes time frames. But on the H4, we've got an area here in the later 1400s, right, within Nasdaq 14,000. Sorry. And then finally a fresh area of value somewhere up there. So just be very careful. Just be very careful of how you play this. I wouldn't take a buy there, but it's your account, your money. Right. Okay. Took too much time on Nasdaq. We will not be doing that with the other assets. Okay. Yeah. White House. Biden described consequences of China providing. So now America wants to go fight with China. God. All right. So this is what I want you to look out for. But just watch my Bitcoin video, right? So there are going to be 2 FOMC governors, presidents of banks. Remember, there are 12 members of the FOMC who are going to keep pushing for a much more hawkish interest rate. There are like 6 to 7 FOMC meetings for the rest of the year. So every meeting, these 2 guys are going to keep voting for 0.50. And during the months or the weeks, I'm pretty sure you guys know about Congress. You guys know about what's it called when you have professionals who push people to vote in a certain way. I've forgotten the term. It's actually an expensive job where you have to convince people to vote in a specific way. So anyway, Bullard and Barkin are going to be trying to convince other members of the FOMC to increase the interest rate to 0.50. So you're going to see a lot of these headlines, right? And it's all about inflation. So please, I don't think it's going to happen. I don't see Powell changing his mind overnight. I don't see that. But if it does, that'll be interesting. We'll have a look at EURUSD. Oil, okay, whatever. Fed can move faster. There we go. There he is again. Fed can move faster with 0.5 basic points heights if inflation expectations become unanchored, right? And Powell's chilled. He's like, I'm only making that decision in June, July, right? So we'll look for the peak. But again, check out my Bitcoin video. Drop in sometime tomorrow, hopefully, or Tuesday, right? Whenever the team is done editing it for you guys, right? Fed sees rates, Okay, we'll move on from that. China plans to invade Taiwan. I mean, another war. I don't know, man. Something's wrong with this world, right? Outside of that, guys, I don't think there's anything, cracking, right? So Nasdaq were clear. If Nasdaq is like this, then you want to get a heartbeat of the US economy. You want to go to the S&P 500, which for me is such a beautiful index to buy and sell. If I was to draw all my back tested levels, you would see how nice S&P 500 is behaving, right? Where the gap period was filled, I was looking at this, during the, let's go to the 15 minutes time frame, during FOMC meeting on Wednesday as well, right? Right, S&P 500 formed very clean levels, right? Just if I could just clear this up for you so you can see it a little bit more clearly. So this big red candle is when they announced the 0.25 basis point, markets just dropped. But why? Right? Because, when you get stuck with one market, I always tell people in the academy, I used to, when I used to do live classes anyways, I used to tell people, and do you guys want live classes back, by the way? That's another thing. But I think we need to do the trading psychology live first. Then we can do the whole course live for new people and repeat. So it'll be module 1 to 4. So I only do one big live class. Lobbying. Yes, Alvin, lobbying. Yes. Thank you. I'm only seeing your comment now. But absolutely. Right. So these guys are gonna the Fed people I was talking about, they're gonna be lobbying. That's the word. Like Barkin and Bullard are gonna be lobbying very hard for the next few weeks to months to get at least a 7-5 vote for 0.50 basis points, right? And remember, some members of the FOMC are naturally dovish by principle, by political party. It's not just about your accounts, right? There's a lot of things at play here. So I don't think two can lobby, but they can also pay for a lot of stuff. So we'll see, right? But this is cool. This is so clean, right? Markets, they had to fill this gap. So this we knew, right? The reason why for FOMC meeting, I chose not to trade NASDAQ was because the clearer move was on the S&P 500, right? NASDAQ was going to move, however it was going to move. But the clearer move, as long as I see market inefficiencies like this, I know, oh, okay, cool. You are going to use the news at 8 p.m. to fill this order, right? So this was filled, and technically speaking, just like NASDAQ, I've drawn a place where I think price should kind of start to slow down. And so that's where my take profit target is. I made the mistake on Friday to allow this trade to go unchecked. So I did not close. Sorry, I didn't lock any profits, right? So maybe if I could quickly just go to the 50 minutes time frame. If you are in this trade with me, then I highly suggest it's best we lock profits under the latest order block, knowing it's most likely going to get broken, right? Maybe not. Let's not be greedy. Let's see what happens here. So on if I'm up at midnight, me and my partner have been watching these. She's just in love with stuff that scares her, and I haven't really had a lot of family time in the last 2 weeks. So we're trying to finish this series. So if I'm up around midnight tonight, then yeah, I will lock profits at about 14,400. Move my stop loss to lock profits, and then see if I can get to my profit target, right? But this is a very nice chart, a very cleaner chart to get a good read on, right? You get the clearest gaps, and remember, all American indices will always move in the same direction. You get a good gap, oh, okay, gap was caused by supply. So what do? Do you try and sell? No, you wait for the pullback and you make money. It's that simple, right? You just keep it that simple. You keep it that simple, right? Like here, we know for the next crash, if there's ever another crash, markets have a lot of room to go down. That's why I'm not yet hippity, about things, right? So the other thing that I'm not going to look at today is Bitcoin, because again, I did a whole video on the crypto markets, for you there. So I just want to quickly, man, I think I'm still logged in my office computer. So let's see this chart, right? So we are, ranging at this beautiful pace of 40 something, 41,400, 41,500, right? And my basic argument in the Bitcoin video you're going to see is we need new wallets, right? It's no longer what Leroy can do and what you and I can do and what you and I and the whales and the short-term holders. Well, we need more wallets. We need more volume. Until we get volume, we're in trouble. And when we're in trouble in Bitcoin, we always start off with a range. And then after a range in Bitcoin, we always get a breakout, right? I'm ready. I don't know why I'm even doing this with you right now. I should just wait, right? We start off with a range, and after a range, we normally get, or we could get this to the upside. But, I think in the video you're going to see tomorrow or Tuesday, I give more clarity. Be very careful of this thing. I would love it. I'm tired of seeing my accounts down 40%, 60%. I'd love to see this all-time high. but I don't want it to happen at the expense of a better rally, right? So me, I still think we need to go down a bit. That's my take. Whether Bitcoin will go down, that's up to me and everyone else involved, right? But it is a retail trader type of thing. Institutions are gearing up. There's an EFT, by the way. I think that we will see. I think we'll see an EFT in April, which is around the corner, guys, right? So that's why I'm like, damn, this is why this thing doesn't want to make new lower lows, right? Because if an EFT drops, institutions are going to flood it. They are going to flood it, right? But also Bitcoin isn't giving institutions the type of rate of return like it gave to retail traders in 2007, 2008. So institutions just want a crypto executive legislative order so they can get into it, but I don't think they're going to flashpoint Bitcoin only. They're going to be looking for small caps, altcoins that do well, big projects that offer institutions 1,000x. I mean, that's the whole point of being a fund manager, right? But anyways, I get lost, right? So let's look at today's charts. Before we've kind of like looked at the headlines, not much is cooking. It's been a while since I looked at CADJPY. I have no activity, nothing in there. We always knew this was, a possibility. It's marked in red for that reason. Remember, once again, as long as there was war, CAD is strong when oil is strong. And like oil did crazy, right? So that's why, like I said, I didn't type a sell signal here in the public spreadsheet, although I haven't touched the spreadsheet in a very long time. But it was a very good idea to buy here, right? Last year. Unfortunately for me, I took profits here at the beginning of the year, and I actually have not visited this market ever since then. But it's just because I'm not in the trade. It's always nice to see analysis play out. I think that's the important thing. It's absolutely always nice to see analysis play out. Right. So markets did come back to a daily demand. You can see I drew it for you. This yellow zone. I did. Check the war room tape. Just type CADJPY on the 365 channel, and then markets definitely came back here at the very first day the war was announced. The invasion was on the 24th of Feb, and as soon as that happened, oil became a factor of this. Oil markets were tagged. If it's your stop loss there at the bottom, markets rallied in, came back down. And markets have been bullish ever since, right? So that's where CADJPY is. Personally, I'm here to look for a pullback. I don't think I can trade this market where it is right now until I get a pullback. They took out a governing demand, guys. What's shocking is, sorry, I don't want to toot my horn, but if you go to the course academy, is the remote course, CADJPY was given probably last year. We are very good at seeing things happen long before they happen, right? So 365 students, if you will review my very last financial notes before I started using the PDF, this is one of those areas of value that was just sitting waiting for us. And now a lot of things have changed, right? So we now want to kind of like look into where price is going to, right? So markets are moving steadily towards a governing supply, right? Oil is slowly slowing down. I mean, it's kind of like stuck. Well, every time I look at crude oil, it's stuck between 97, 98, and I guess 1010, but sometimes a little bit lower, like 105 or something. And you'll remember, if I can just quickly borrow your eyes with the crude oil, we did have a pending order, right? Right there at that 97-ish mark that we spoke a lot about. Crude oil. There we go. I'm going to go to the daily time frame. I just want you to see this range because, oil needs to make its mind up. So I told you guys to buy oil here. I did. I promise you, intraday traders, a London session traders, we spoke about it. But even in last week's Sunday's War Room, I did say, this is a good place to go. This week might be the week I might start looking into locking profits. Now that, remember I said, if we break this structure here, I'm golden. And we have. Right, I haven't locked profits. I'm still at full risk on this particular trade. The reason why is I would like to see two good supplies taken out. That's just generally how I like to roll. I want to see commitment, and that's also because I don't like being necessarily pulled out of a trade if the trade was going to go my way. And so I locked profits too early, and then markets come back to entry just to go back up, because we know, according to the stuff we've been taught, or at least that I've taught, that markets are allowed to retest specific areas of value. All right, so it's absolutely important that we kind of like remember that, right? I generally don't want to kind of like bum rush price, but in this particular case, this area of value here is absolutely of importance to me. I'd like to see it first removed. You know, markets are dancing on the one lower here, right? So pretty much at the beginning of this week into the market close, markets have come back, which obviously is a good sign, right? If you hit a supply and markets don't drop down with quick, fast-paced, you know, and a rush, it means there's some influence. There are some buyers at play trying to slow things down. And so I'll be looking to see, you know, over time how price deals with this area of value. That's kind of like my idea here, but it might be a good time to kind of like also start considering locking profits. Right, that being said, there's a supply here, there's a supply there, there's a supply there for oil, right? So oil, while it was easy to go up because of the tension, like I said, guys, if this week or maybe next week, I don't know, I'm not into war stuff, but if there is a coming together of the minds, right, and the markets are basically saying, look, Russia, blah blah blah, they've agreed to terms, then there isn't going to be you know, a strong need. Everyone is going to be looking at curtailing sanctions. I think that's what Zelensky is going to ask for. He's going to say, me and Russia have spoken. We now ask the West to reduce their sanctions or something, you know, adjust something. And the West might look at that in two ways. One, America could be devious about how they are and want to start problems and war. Or two, they could be worried about the impact of energy at home. And when they do that, you know, things might play fair. So this supply is at play right now. That's why I personally don't want to move on my stop loss, but I do, in terms of locking profits, but I do think it's now time to break even. I think it's time to break even, at least on one or two trades, and then I'll let the third trade run at risk. I just don't want to have an unnecessary loss, right? But this cluster here is filled with two supplies, and there's another big one up there, right? And all of them, this used to be fresh, but this is fresh, that's fresh. And, you know, and then we go back to that 120 psychological target that we're supposed to naturally get to because of inflation and not because of war. You know, so it's opened the gates to a lot of things. But yeah, CADJPY is just one of those currency pairs that has benefited from this entire mess of war. Absolutely benefited, right? So the only way to trade this thing is to get a pullback. Right, I think we absolutely need a pullback. We need a pullback in CADJPY. You can see the governing structure, like I said earlier on, prices fully removed a supply, right? You know, making a way towards the heavens, right? So our next big target is at about 97.687 long term. That's where oil is going, right? You can't even talk to me about this area. It's been broken, right? It's literally kaput. We've just deleted it, right? So this is the next target, and this is a serious target. This is a fresh target. One would argue that the way this market is priced in is there might be still bad news, war news, in you know, for another month or two. You know, I don't know if that's possible. In America, in the United States, they're moving towards summers very soon. While in Africa, we're moving towards much more colder winters. You know, so because it doesn't really affect them right now. You know, this could actually rally on forward. That would be my assumption, right? If you go to the governing, mayoral time frame, you will notice that we still have a very good long-term buy level that's not tagged. Our daily buy one, I said this a long time ago. You know, I'm always just, just not shocked, but absolutely impressed with our systematic trading strategy. If you're patient enough to see price through and to average out correctly, you know, you make a lot of money, right? So we can see that markets took forever to come to my buy one, and when they did, they left an area of value and then went to a supply, and then took forever ranging, flirting with it to come back there. So it is my I guess unction, assumption, and unction to function, I guess, in that sense of waiting somewhere there. That's what I would do. I mean, I'm looking at a very strong rally here of price. Now, again, it easily could turn out to be like by two ways, just too far, Leroy. Based on everything that's going on, it's just too far. So what you should watch out for is the fact that I think it was Mr. Kakoma in one of the intraday sessions. I'm just going to delete this for now. Who was talking about how a supply can convert into a demand and how that does happen. So it's like when I tested it, like I say to Mr. Kakoma, whenever that was, there's a 65% chance that zones become flip zones and they work, right? So the H4, there has to be an H4 demand in there though, right? So there is one. So cowboys, you'd have stuck with a zone this big on the H4 time frame for cowboys, and the reason for that is lower demands have to matter, but at the same time the whole point of a flip zone is to turn right at the top of what was previously a supply, now a demand. And so if you've got a setup like this here, then that's technically the only place you want to risk your money at. But because I'm a swing trader, I would want to open that up a bit to cover the lower demand just in case, right? So this is 62, so it could be too big for some people. So if you have a small account, what do? You choose a prime area. You just keep it prime, right? Let's narrow it down a bit. So I'm using the 2-hour time frame. So you have two trade ideas and then you split them. So instead of risking over something like 60 something pips, right? Area 1 is just your proximal line is at the top there. Your stop loss just down below is about 20 pips. And this area of value here would be, you'd be risking slightly, just above 30 pips, 37, sorry. So it's plus or minus, and you choose. But if you've got a small account, you definitely have no choice but to wait down here. That's what I would suggest. If you're a small account, you might as well just take the smaller risk. But if your account is okay for currencies and you don't have margin calls and blah 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 blah, then this is a good place to take a risk. Once again, cowboys, not anyone else. And cowboys make money, guys. Markets are all about choosing probability stake, high risk, low risk, high reward areas of value. I'm not a cowboy. It just doesn't suit me, right? So I would be somewhere down here with my 5% lot size, right? So anything that I'm risking 5%, it has to be a high play area. And if you know me, similar pips inside this zone, whether you choose 2 or you cover up 1, we're both all risking about 60 pips here, all right? I'm 69 pips here, but you can narrow this down on the smaller time frames. But I'm just saying, from a bigger time frame perspective, it's all the same. So if I'm going to risk 60 something pips in my world, I would rather risk them down here than up there. But a flip zone is at play here, very possible. This market feels bullish, right? It's at play. But if the talks happen in Russia and Ukraine are seen eye to eye and everything is okay in the world and they want peace, then my buy is going to work better than this. I guarantee it, right? Because there's going to be no need for a stronger oil. Everyone's going to be trying to fix oil. So watch out for that. That's CADJPY. You've got a risky buy there. I'm going to take a better buy there. And I also want that buy. Why? Well, that's because a better risk reward ratio, right? I mean, what's the target? The target is the next governing supply. That's the target. So if markets are going there, and we already know where price is going, because markets are not random, only humans are, right? I guess you have to take the course to understand what that means, right? There's a good risk to 1:9, right? Compared to taking a risk there of similar pips, right? Similar pips, you are risking something like 1:5. Still a good trade if it works out. Still a good trade. Right, so that's CADJPY done. So look out for that. And the scenarios being war be the governing sentiment, right? But for me, I'm really looking forward to probably putting a stop loss, sorry, a pending order there. All right. If I get a chance, I'll update the spreadsheet. But if not, I'm hoping you can see this for yourselves. Right. The next one is Swiss franc JPY. I want to look at JPY pairs for a specific reason, by the way, right? Very soon it seems we're going to be completely out of it, right? So we remember this buy one worked a while back, but we did take profit. We came out here at the beginning of the year. These are all last year's strong swing signals. All of this stuff, personally, I'm not in anything here. It's been a while, right? So let's see what it looks like in the bigger picture. Buy two again, markets just moved, right? Markets moved without coming back. Oof, this market is even worse. Right, look at this. We are about to confront a major turning point. This chart's gonna take us back to basics. Remember when I was teaching this stuff? Those of you who've done the course, it always feels like, ah, man, will this stuff ever happen in our lifetime? There we are. We're about to approach a major turning point, and it's actually weak filled, so it's not really a significant area of value, right? The body that we are looking at is somewhere there. But and so some traders will draw the supply like that. I don't. I just want to know all the activity. These are all sellers pushing price down, right? So we are about to confront a major turning point supply, and that's a big deal, because if we break it, then we're making a new new all-time high in Swiss JPY. And we know that BOJ, Bank of Japan, is only looking to adjust their interest rate perspective sometime in October, unless something changes drastically, right? So buy one is our base, right? Markets are not going to be coming to buy two anytime soon. So we now need to look for momentum buys, but also bearing in mind where price is. And just quickly clean this chart for us. And by that, I mean also looking left, gotta see where the next supplies are, because that's important, right? So buy one did its job, but unfortunately, we got out of this sometime in Jan. And I personally haven't had a swing trade play in here, right? So this area is this thick. But I'm assuming due to multiple time frame analysis, I made it slimmer, right? But look, we are bullish inside the zone. Right, and this is the month of March. We have 10 days left for this candlestick to close. This candlestick might need to start forming a wick. But even if it does, even this candlestick there's a little wick at the top. I don't know if you guys can see it, but I definitely can. A tiny, tiny wick at the top of this candlestick, right there. It is there, right there. Clean wick. Right, now even if it does, right, and some selling starts to happen in the last, I guess, 5 to 6 market active days, right? Markets have made it known that they want to start reducing this area, right? So if you're looking at a 50% a drop, of 50% of the sell orders, and normally we worry when price breaches 50% of an order block, because then we now know that the flow of money is about to change. It's not a lot of sellers there, right? Institution versus institution. I'm not talking about supply, support and resistance, sorry, or retail trade, or MACD, or divergence, or indicators. I'm simply saying, just looking at this chart, just to see what the banks are doing for themselves. I mean, if you really were to take the time to learn this language, you would see for yourself that the banks have visited a bearish engulfing pattern. Fantastic. Why is this zone so big? The zone is way too big. And because of that, we might even have already breached the 50%, right? So this is really the zone we're looking at, and that's the area of competition, all right? That's important. Drawing your areas of value correctly is also important, because there is no other way to then see the order flow accurately, right? We can look at COT stuff. We won't do that today. We want to look at as many charts as possible. That and the fact that, I feel guilty because it's not yet up to date. But we really want to see what banks are doing, right? So let's redraw 50% of this order block. I'm going to put out my ruler, and you'll notice, right, this communicates a lot. It communicates how serious the buyers are, right? The buyers are very much close. So if March closes, the candlestick of March, even if if markets were to push up just a little bit more, remember we need a new candlestick for this week between this War Room 21 March up until the 25th, right? So we've got 2 more candlesticks for the month of March on the weekly time frame. If the next one does this and crosses over this line, this area of value is doomed, right? But if the next one was to start off somewhere here next to it, and then markets did something like this, you see a little red wick, and Friday we come back and we see that markets are now doing this. It doesn't mean the game is over and blah, 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 and we're now dropping, but it certainly means that at least there was enough sell power to slow down the buyers, right? And now, if that was to happen, which would be much more ideal for the trade idea we want to look for, I mean, we want to sell right now because markets is in a governing supply, but we really want to sell with caution. It's not the type of supply you want to rock with, right? I wish I could extend this right across, 50% inside an area of value normally always coincides with a strong order block, which is generally considered the last line of defense. So let's see on the daily time frame what we have on the left. All right, on the left, I'm going to clean this area out. Remember earlier on, my chart's already preset, so I already had the zones marked correctly, and I just made the yellow zone bigger just to represent what's going on, right? See that? That's beautiful. So that's how I would draw my daily supply. It's nice, right? When these things just sit together without forcing them, right? So somewhere up there is a daily supply that you would want to look out for, right? So you want to sell this market because you're absolutely confident in your analysis, number one, but you also want to sell this market very mindful of the fact that sellers are absolutely weak, right? So most of the sellers in this market are now standing on their last leg, hoping to push markets down. This is really what you kind of like want to quickly come to terms with. And if this area of value does not hold, it's going to be interesting. We know that on the weekly time frame, markets have already come for a fresh touch. If the zone is this big on the weekly, we know that there's already a fresh touch. I hope I'm making sense. I hope I'm making sense to you. If I'm not, you have to talk to me. So if you draw the whole yellow zone correctly, you will know that we've already got a fresh touch here, right? And you can see that a lot of sells were made for almost a month. Then markets did a retest, right? So markets turned by themselves. I'm pretty sure, you know, this is an interesting place for play. So if you do take short-term swing sells, right, I would watch out to exit here. And if everything in the world is the same as it was in the last 2 to 3 weeks, that is war, that is the need for safe haven flow, that is all sorts of things like Swiss franc, dollar type of thing, gold still doing quite well, then, you know, after the sell, this is where I'd want to buy. That's where I'd want to buy because, you know, if markets do breach that area of value there in the next week, then, you know, there's really nothing catching price. There's nothing stopping price from bouncing back up from this level and nothing stopping it here. All the sell is done. And then your next supply is the governing supply, right? So there is a sell idea here, but be very careful with it, right? You're going to have to be very good with your levels. This is what it looks like on the H4 time frame when markets closed on Friday, okay? And we want to buy somewhere down here, but we also need to be very clear about where that is. So let me switch to the daily. Markets might not even make it down there, all right? But it's a good idea to have a healthy pending order here because it's a perfect low, right? So we drew this based on the doji candle on the weekly time frame. And if you just adjust it slightly, you'll notice that markets were pointing us to something like this. Now, this is almost a non-negotiable because of how big that doji candle was, all right? You want to have a swing area that looks something like this, okay? Nice. And then on top of that, you also want to make a decision about what you're going to do here. I can guarantee you that this will fall as a fib level. It just depends on where markets are going to stop. Right. So if markets were to stop by exactly by the white line, you can see this is between your 50 and 60 or inside your golden ratio. If markets were to push up first and maybe, let's say, take out the supply. So by the next white line, this is still inside that golden ratio that we look out for, right? So this, for me, if we're really certain about a long-term bullish market, this for me would be the play on the daily. So I would unfortunately have to have two pending orders, one here and one there. If this doesn't work, risking 2.5%, the next 2.5% will make up for the loss. And as long as I hold, right? So then I'll be going back up there with Swiss franc JPY. Right, so that's done. Euro AUD. Once again, guys, if you're right-handed, please use your right index finger to select on your mouse or on your phone to hit the like button. If you're left-handed, just stretch that left index finger and do the same. I would appreciate that. Share the videos. Let's get the whole world trading. You know, in Africa, the context is everyone is unemployed or blah, 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 blah. Well, here are markets, man. We can earn here. Tricky, it's hard work, but you definitely can do it. Right, EuroCAD with a small lot cowboy area here, but a little more intraday setups. So we need to see the big picture. Like Euro AUD is interesting. I find this fascinating. Number one, I missed the swing sells. That's number one, right? Which absolutely sucked. And then I waited high, waiting for price to come, which also sucked because markets have not yet returned. Kind of like left me feeling a little bit naked and alone. Right. So we know that the first landing zone for this pair is all the way down there. All right. I can't even guarantee it's the last time or the last place that price will drop. Right. The bigger picture, right, is markets hit this sweet supply, at a perfect time when supplies or demand needed to be hit, which was March of COVID 2020, very clean sell trade. But again, this is one of my favorite things to teach when I was teaching live, right? The perfect buy setup that exploded out of nowhere because of COVID, and the sell, we got out down here like literally a few months later, thinking that this governing demand was going to hold, and so our sells were not going to work. And then I kind of like just watched markets range and create supplies, and then almost lost track and just never got back into it. But yeah, prices have done quite a remarkable job dropping from March 2020, and continuously continuing to fall. And this is the last, layer of hope or last defense for buyers. Right. If I look at this thing correctly, I don't know what I'm highlighting here on the smaller time frames, but it doesn't matter anymore. I'm just going to take this zone and drag it out. Right. We've got a nice Talitha area that builds up into a strong imbalance to the downside. Right. So that tells us something. It tells us actually quite a lot. Sellers are still dominant in this market. Right. Euro is still weak, has been weak, was rushing for demands. Euro USD was one of the first Euro pairs to get to a demand. And now the rest of Euro is trying to figure out its basis, right? So this is clean, right? A break of market structure that was outside a trend line, which cause of concern. They're reminiscence and rem effects of a demand somewhere in here with a good imbalance, which if we see it happen, could push price up. Sometime now in April or within March, right, to something like that. If there's weekly supplies and daily supplies there, if not, then we could finally get a better retest, which is what would be preferred, right? But that's a long-term thing, and I don't know if that will even happen. But what we want to look out for, I'll come back to Euro AUD. Just look at Euro in general. It's different across different trades. So Euro pound is long-term weak than something like Euro USD. But just check this out. The euro currency index as a whole has finally arrived at a place where we said it would, right? It's touched down on these significant demands. Clean drops, from governing supplies, blah blah blah. 16th of March, 16th of June FOMC to a new FOMC, kind of like renewed debates. And the question that Euro wants to know is the dollar supply going to hold? That's all Euro. That's all the currencies care about. If you listen to Powell, when Powell always gets berated and bashed for being slow and sluggish, which I think he is. I think he is very slow, very behind the curve with inflation, all that stuff. But he always says, look, man, it's fair and fine to just think like we need 0.50 basis point. And remember, I kind of like agree and disagree with Powell on different things. But this point I agree with. Everybody thinks this is where we should go. And it makes sense economically. As an economic model, it makes sense. Serene, absolute pleasure, buddy. Absolute pleasure, man. I love doing this kind of stuff. Right. So thanks for the comment, dude. Right. So this makes sense. But Powell always makes an important point. The dollar is one of the only currencies that is almost in every single country as a currency reserve. Your reserve bank in your country, in Kenya, in South Africa. Let's not even start with Zimbabwe. In Malawi, Botswana. Where else do we have students? Philistine, Palestine, Philips. Wait, where's J from again? I forget. But it starts with a P. We've got students in Dubai. Whichever country you're in, the US dollar is a currency reserve. And so what Powell is saying is we don't just think about the economy as in general, right? We also think about its Philippines, Jay, and Jay is actually around. Jews, man, they're good to see you, buddy. Good to see you. Thanks, man. Philippines, yeah. So it's across the world, and so when they increase the interest rate, they actually are, Powell is saying it's such a big responsibility because it has the potential to affect how other countries view and interact with our currency. That's why whenever you travel at the airports, there's an exchange rate center. Right, now the dollar index, the DXY, or the US dollar, I don't know if you guys know this, but it's a weighted currency. Like 50-something% of euro, something percent of JPY. That's what makes the DXY index, right? So these things matter. We're not looking at these things for fun. They absolutely matter. So if you look at it correctly, the dollar is at a supply while euro is at a big demand. And a lot of questions need to be asked. Like I keep telling you guys that somewhere in this crystalline line, especially on Euro USD, so you see how close that wick is. This is the demand that price wants to get to. There was a demand here where markets were getting to, and I kept saying if you want to go to C but B is in the way and you're living from A, instead of going around it, you might as well go through it. This is the go through zone. You can see that markets have dug quite deep as a euro index there, but I guess you'll see it much more clearly in Euro USD. I know we're doing Euro AUD, but I just want you to get this carefully, right? If you look at Euro USD, if you look at Euro USD very carefully, you'll see that the demand that we're referring to here, we drew this zone in the morning. I guess I was teaching something. I'm just going to delete that because it's in the way. Right, this is the B. For you to get to C, you have to go through B. This is the B, right? And markets have done a fantastic job of lining up here. Now, the black lines represent the only daily demand zone I told you guys was most likely going to hold. I told people 2-3 weeks ago, look, don't be in a rush to buy euro, check the sentiment. But if you go to the daily, we put black lines. Look at how price set perfectly. Those of you who come from my morning classes intraday, you will know for a fact, that we spoke a lot about this, right? This was the only value-based demand clean that was still holding and left us, the only last place that was fresh there. And that's where prices hit. So what we could celebrate and say, yeah, euro is bullish. Euro has done it now, right? Yeah, kind of. But what euro has also done is it's also started to level out buying areas, right? Started to slowly but surely weaken some potential areas of value where the buyers are. So these early buyers, bank buyers who were already hedging and betting against that zone, they have been paid, are getting paid, right? The price didn't break that zone, so there's still a couple of unfilled orders, but look at the movement, right? And look at the fact that there are multiple daily supplies, and look at the fact that there's still a large market inefficiency of sell gaps all the way up there. I'm not saying price is going to get up there. I would like price to get up there only so I can sell it back down. But the bigger thing that I want everyone to be aware of is we kind of haven't made contact with the 3-month demand zone again, right? So there's a 3-month demand zone. I've remarked it here. This is what I call A, blah, blah, blah. When price needs to get to C, markets must go through the zone to get down here. Markets have not yet gotten down here. This zone needs to get a retest, right? And you want to see this play out financial quarter per financial quarter. If you come see here, maybe there is too far. During the war, during inflation, during everything that happened in the world, right? Markets in Euro USD did leave a supply just above, right? So I don't mind Euro rallying all the way up here in these levels, but these levels should then send price down, right? So you'll see the exact same thing in EXY, which then leads me to my analysis to Euro AUD. My analysis to Euro AUD, right? So there's the same supply that I'm saying is there. This is the currency index. Remember, Euro currency index will always mirror Euro USD, right? So you've got that at play right now. Be very careful of that. If you're gonna take trades, you're selling low on the curve, right? So it doesn't come with its problems. It comes with its own problems. It's low on the curve. You should have sold high. We sold high so many times. So be very careful that markets definitely could use this. It's definitely a valid supply, but it's low on the curve. It doesn't change anything. It's low on the curve, so it's got the lowest volume. You can't even see an order block in Akini Hashi. So watch out for that, right? But ideally, in a normal world, you'd want to see something like this. Long term for 2022 to 2023. You'd want to see that right there. And we are in March, right? So look at how markets come. This was the January, February, March of 2017. This was COVID, March 2020, February, March, and now we are in March of 2022, right? Those of you who still think markets are random, I have no idea. I have no idea how you believe markets are random. I don't know who lied to you. I honestly, I mean, I try and make this paper. Markets think in 3 months, move, take profits in a year, in a 10-year scam, right? So this in a 10-year plan, right? January, February, March, markets created the first 3-month demand. Price came in March 2020 during the COVID to resuscitate that. Markets are back here during a war crisis in March 2022. What more do you want? How more clearly do you want money to communicate to you, right? So it's quite a big hit and miss for price, right? So that's why I'm saying it's unfortunate that there was a demand here, right? But this demand is entrenched with the 3 months demand, right? Hey Jack, good to see you, buddy. Appreciate your comment, right? So now EURAUD is playing, you know, a similar play set, right? So we've got a breakup structure. Obviously, you want to be in a sell, so we want to quickly break down which type of sellers exist in this market. For swing traders, with a PCP play setup, this would only be for intraday traders, to be honest with you. For swing traders, we have a problem. So, and the problem is, you know, this year, you know, it's almost like, and it wasn't a conscious decision. It's just because of the war and the sensitivity in the market, I've decided to just strictly go high probability, right? So even come up with the cowboy term, right? So if you're a cowboy here, I don't even know who's in there, who's not. I'm definitely not in there anymore. I never was. If I could be wrong, but I don't think I was ever in this particular trade, right? So we want to wait for price, and I can delete this now actually, and just delete this zone because that's played out. So the problem for us as swing traders and those of you who are long term, we have a dilemma, right? Markets have done whatever they wanted to do, and then markets have given us these break of market structures which are powerful, but they're also teasing us, right? I mean, if you look at this on the weekly time frame, it might actually correlate with where euro needs to go. Those supplies are drawn euro USD. The one I said watch out for is low on the curve. The supply on the EX currency where I said it's low on the curve. You actually almost have no choice but to wait for a play there. All right. So the same price that was breaking. Remember, price is fractal, right? I don't want to host a class tonight, but if you've done my module 1, you know that markets are fractal. Fractality speaks about how, you know, there's going to be a duplication across all time frames, right? The same stuff you look for, your change of character, break of structure, BMS, blah, 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 counting zones, whatever it is, on 5 minutes, 15 minutes, it actually plays out on the larger time frames, and that's what creates the trend, right? This is what creates the trend, right? So this for me is a beautiful place to wait. But the problem is, you wait, just gotta wait for it, right? So that's that's all I got for swing traders. You know, nothing much, nothing less, right? On the daily time frame, you'll find confronting zones where you can take much more earlier. Just be smart enough to know when to get out. Why? We've got a swing low, swing high. So if I draw a downward Fibonacci here on the weekly time frame of EuroCAD, right, and then leave it, and then translate this to the daily time frame, you will see what I mean, right? So markets did a strong rally right into the 50% mark. You guys, do you understand my? Okay, sorry, let's start again. First of all, they'll be like, no, we don't even see what he's doing. He just says he did it, then we didn't see it. So I'm gonna make these numbers show up closer, and then for the war rooms, I'm gonna fix my fib lines to be more structured. When I'm trading, I like them dashed so that they don't give me, you know, too much there. So I want you to see this carefully. So I'm going to go back now to the daily time frame. There you go, 50%. Right. So markets rallied into the zone, right? Since you know, risk on sentiment started to come back up. The white lines, don't even worry about them. The white lines are just showing us where the break of market structure was. We can remove the white lines if they will be confusing, right? There we go. So we've got a clean chart now, right? And markets rallied all the way there, right? And I'm saying, look, man, you know, given everything that's going on in life, I mean, I would love to take a trade somewhere up there inside the zone, inside the weekly zone. That's definitely one place I'll be talking. I promise you, what's going to happen is in War Room 70, this is War Room 59 today, War Room 70, War Room 80, War Room 88. I don't know when. There'll be a time where markets will come here and I'll say, I put my pen in order tomorrow, right? And I told you, do you guys in? And I you know, I suspect some of you guys are not in all these movements, right? And then this is where I was saying, if you know when to get in and get out, you know, this is a not high risk, but just take the trade, but knowing when to get out, right? Why? It's closer to a supply. The reason why we don't like to take such trades anymore is, number one, it's a supply on top of supply. Number two, it's right above a better supply, right? So you're really, really stuck. The reason why you'd want to take a risk to take is because it's supply on top of supply. With proper stop loss placement, there might be enough sell power to send price down. But the question is, send price down to where? This you have to wait. You have to wait for markets to talk to you, right? You're going to have to look for how price eventually got up, because when price was getting up, markets might along the way, on their way up in the future, this week, the second week from today, etc., create demands. And those are the demands you want to target. You want to get a clean 1:2, 1:3, preferably from those zones, right? So let's say there's a demand there. You sell from there to there, you exit, and then you wait to sell with me up there as a swing trader, right? I mean, that's as clear as day. Why do we want to sell EURCAD? Because it's not yet done. It's still going down. It's if we miss the first 2, 3, 4 sales, right? The only ones that you can catch up there. Will they be played? Yes, there is down here. Will there be retail traders tomorrow, Monday, Tuesday, Wednesday, selling this thing like crazy? Absolutely, they will. Why can't we join them? Because we're not dumb money, right? We have a propensity for this thing. But as an intraday trader, this is what you're looking for, right? So you're looking at this leg of price. You're going, okay, fine. So markets drop like crazy and then try to resuscitate. Why did price turn there? If you don't know, take the course. If you don't know, take the course. I mean, I don't even admit new students every month. So I guarantee you, I'm not telling you to take the course because I live off your course fees. Unfortunately, my course is extremely cheap, number one. Number two, we don't get enrollments every month. So trust me, I have my life sorted. I'm asking you to take the course because war rooms are just a guidance of price. But we don't understand this thing. If I get busy and disappear, which I do sometimes, and I'm allowed to because I've got other things going on, you need to understand your own money. Where's your money coming from and why? Now, let's see what happens here if we go Hikinashi. Nothing. Right? These are all low volume sales, but they work nonetheless, right? So markets didn't work 1, 2, 3. Why? Higher supply. You really have to get this drilled into your head. The first supply is to entice your psychology. The first supply is when the snake was talking to Eve in the Garden of Eden. It's the apple. The second supply in this particular case is when Adam eats it and fails to take accountability and blames Eve, when the better supply is the one up there that gets paid. So all of this then creates liquidity placement, right? Markets right into a clean supply, clean order block, fresh touch, prices gone down. Now, I know tomorrow, Monday, and maybe Tuesday, there'll be retail traders across the world thinking about buying and selling this asset, right? We've got clean breakup structure. I know that everyone's going to be looking somewhere here, somewhere here to make their case. And I want to warn you about all those levels. Most of them will not work, all right? In the 1 hour time frame, I think that's more treacherous, right? The 2 hour gives us a better vision for intraday traders. I won't lie. I have no interest in taking this trade with you. The short-term stuff, I won't lie, because the truth of the matter is it's a bearish engulfing pattern, right? When you use normal candlesticks, which is actually, yeah, this one here. So can you guys see this on YouTube? Just let me know if it's not clear. Right. So my yellow zone is here, right? So my bearish engulfments, yes, I can take the risk of taking 2 touches. So for example, waiting for a fresh touch. But when you're now low on the curve, which we'll talk about in module 3, when you're now low on the curve, please note that it is absolutely dangerous, right? In fact, as an intraday trader, swing traders, it's fine. Intraday traders, because of the time frames you're using, you all you want in life is bread. Fresh bread, right? Fresh areas of value. You ever seen how people shop for bread? You by the time you go buy bread at 3 p.m. in the afternoon, the bread that you find has 10,000 human beings' fingerprints. Everyone's just feeling it, pressing it, massaging the bread, hoping to get the freshest bread. And that's what it means. You want to get a fresh area of value, right? So for intraday traders, you want to wait for something like this, and you want to be good with God. This is a risky trade. You want to be good with whomever and whyever you pray to, right? Because this does not have the highest probability setups, but it's the best in terms of which area to sell here. You don't want to sell first day, you don't want to be the first to money. Let price rally. What would cause a euro rally? Once again, the stuff about the war, blah blah blah. Things are good. Let's rally on, right? I could risk a small lot size here. I mean, like I mean, if we look at this market in the London session, although I don't think Euro AUDs, it's the 7th asset we look at every morning, right? So if we look at this, asset in our London session, can I just pull up the London session chart? Euro AUD and see what it looks like on the 1 hour. Right, you can see those of you attend my London session, there's that area gray I told you was the only area to look out for. Markets came back to it. We don't know, people do attend, but we don't know if they took the trade, right? So this is London session because we're looking at the market openings, right? We want to really trade alongside smart money, right? So up here is 9 a.m. and that order block that I just showed you there is pretty much, just during the Asian market session. So we shall see, right? So yeah, I'll still say, look out for that. It's quite a risky area to trade as as an intraday trader, and the reason for that is because there's a better area of value there, right? So you're better off, risking quite a bit. Let's see how big this area is. It's so hard to make a decision for people. When you trade for yourself, it's your money that you win or lose. When you trade for people, it's almost like carrying people's crosses, and you just never know. It's quite a tricky job, right? So that's 40 pips, and the whole area is about 140, which is so big, right? So yeah, man. Let's go to 15 minutes. Right. If I don't see a fresh area of value on the 15 minutes chart, I want you to know I'm declaring the cowboy trade, right? So that's better. That's much better. Let's just quickly see something. All right, so price does do a quick pullback. All right, just to double confirm that this is it. Right, so it's a high risk, very high risk, high HR, right? I'm telling you now, it's a high risk area, but it's a good place to start if you're going to wait for a retracement trade and nowhere else, right? So nowhere lower would I recommend you selling. But again, I am not your financial advisor. I never go with you to the casino. So I will not be going with you into your trading account. Make up your own mind here. But for me, somewhere in there on the 50 minutes time frame seems to offer the first low risk trade, right? The first low risk trade. The only problem with it is that there seems to be a fresh area of value, or not fresh, but yeah, technically it's fresh, right? So this is of worry to me. So if I was to take this trade, just so you know, I would sell up here, just above. If I was taking this trade with you, instead of looking for that 50 minutes area there, everything of mine would be lodged here. But then I would then flip this into somewhat of a short-term swing trade. So I'd have something that looks like that. It's quite a big area of value to hold, but at least I would know I will be part of all the liquidity rates in case they do decide to go down with me. All right, but if you want to be much more meticulous, let's go to the 15 minutes on the same zone, and then we'll move on from Euro AUD. Oh, come on, man. If someone was to offer you a copper engagement ring and a diamond engagement ring, and you loved both people, would you not go for the diamond engagement ring? Well, this is the diamond engagement ring. If you loved both of them equally, this is the good day. Say, what ties should I join you tomorrow and Tuesday? Oh, time for the London sessions. So our London sessions are every day at 9 a.m. 9 a.m. every day, London market open. Although on Friday we did the New York, so I was thinking of switching it up. But tomorrow definitely 9 a.m. So let's do Monday, Tuesday, 9 a.m. And Wednesday. In every day 9 a.m. I want to also look at New York opening, but I just don't know who's free in the afternoons. So all those things are for free, by the way, right? But anyways, look at this. This is clean, right? This is a clean zone, right? So intraday traders, reduce your areas of value. You want to trade as close as you can to your stop loss. Why? Because that means you're risking less. Number one. Number two, it means you can offset, right, a smaller, tighter, much more accurate area of value gives you better risk to reward. That's the main reason. Number three, because the area is so small, once again, I do this every time with one trade. Look at this. This area here is 16 pips. Because it's so small, you can now use a big-ish lot size still without attacking your capital. Right. You find retail traders of $100 account going 0.50 thinking it's cool. And it's cool on demo, right? But you're fooling yourself, right? You rather teach yourself the right thing, right? So we're looking at Euro AUSD. I've given you, if you want the link to this calculator, by the way, let me know now, and I'll drop it in the description of my video. I've spoken to you guys about it. It works on indexes. It's brilliant. It's easy to use. You calculate position, pip, everything, right? So Euro USD, 16 pips, right? That's how big this area of value is. Let's say you only have a small account. Let's say you have two, forget about, that. Let's say you got $200 or 250 or whatever, $200, right? And you only want to risk 5%. I mean, I've done risk management videos on the channel. I'm not going to waste my time. Check this out. With $200, you can use 0.8 lot size if the area of value is 6 pips. Remember, with $200, if you really think about it as a swing trader holding areas of value of about 100 pips, it means you can only go 0.02. Look at the difference. That is wild. Greetings, man. Greetings. Thank you. The last two people who've commented, TAURAI and TLES. Can you guys? Okay, you in South Africa. So the last person who's just contacted me, the very last person who just commented, say greetings. Where are you from? Let me know. Guess we can also do the New York session. All right, cool. All right, yeah. So I'll come up with a new schedule for market opening. So maybe Monday will be 9 a.m., Tuesday 9 a.m., then Wednesday, Thursday will be New York session 3 p.m. And then on Fridays, I prefer the London session because I don't trade anything else on Fridays except for stocks in the afternoons. And most of the time on Fridays, I'm selling them, actually, not even buying. Right, so it's absolutely crucial. But Zim, all right, cool, man, fantastic, great to have you, Right, I've dropped the link there in the live chat, and I'm gonna put the link in the description box. But you see, this is quite clean, right? You're literally risking about $10 of a $200 account, which is good. That's 5%. You're not risking crazy, but you're going in quite well at about 8 lot size. If you can sell this thing back all the way back to Timbuktu, wherever it came from. And I'll show you right now. So if this was your sell trade idea, you sold here, which we now know is about 16 pips, right? And we decided, let's go to the 1 hour time frame. I'm teaching, man. I don't want to be teaching today. I just want to give you guys. So if markets were, because markets are breaking structure, so the assumption is prices are going to go lower. We just need markets to quickly come back up. So if you were to turn this intraday trade into a swing, I'm not saying you should, but if you say, I'm just going to hold it till the last place in time where price came back, you're looking at making about 328 pips. Do you understand that? That's a lot of money for a small account and a patient trader. You have to do both. You have to be smart and patient. For a patient trader who can flip this over into a swing trade account, this is a lot of money. If it goes your way, that's a 1:20 risk to reward ratio. That's clean. I still think, right, if you give me a copper ring and a diamond ring, I would take a diamond ring. So I still think that smart money might clear a lot of people here for liquidity. So why not wait at the highest supply, right? But either way, you could have 2 sell orders here, lose $10 here and risk another $10 here, and then let this baby slide, like let it ride out, right? That's 1:11 now, right? Because the area value is big. This is good money, right? Euro AUD, time to move on. Spent a lot of time on a lot of assets. Euro pound, we've spoken about this every Sunday. We want to sell, Then markets fill the gap here. This was sorry. The reason why I'm leaving is because this is my London sessions chart. This is the one that we're going to be looking into tomorrow. So it's 9 a.m. But on the 15 minutes time frame, there was a gap there, right? A gap that I knew smart money was going to come back to close, and it did. The problem with it though is it went past the gap, right? And I think it was sentiment. Where's the gap on euro pound? Am I going crazy? I'm pretty sure there's a gap somewhere. right? I won't waste your time. If I can't find it, I'll move on. But I'm pretty sure there was a gap somewhere, right? But in the smaller times, we discussed this many times. Is it not euro pound? Am I losing it? Maybe I'm losing it. Right. Anyways, in any case, markets rallied all the way up and then broke through. So let's quickly find our swing charts, which is my FXCM live account, and then start to kind of like break what all of this stuff means. I'm gonna go straight to the governing time frame, number one, because again, I want us to really be clear. Price has no choice but to drop. In the long run, price only wants to come here. Boris Johnson's demand from 2019 when he's elected has finally broken. I've been waiting for this for 2 years. It's so late. I'm so over this chart. But nonetheless, markets are finally getting ready to do that. Now, this is what price is after. And in my humble opinion, it's what we missed, or what I missed, right? Maybe you guys will be like, yo, why is he saying we? It should just be I. Just want to quickly clear this up, remove all these lines so we can actually see where the wick is. Still not yet clear. Right, there we go. There are a lot of annotations on from the smaller time frames. Right, that's perfect. Man, I'm gonna end up removing all the drawings, right? Let's just clear the whole chart. It's fine. We'll reanalyze it. There we go. Right. So the only thing that matters right now on euro pound on the governing time frame, number one, is the next demand for the next 2 to 3 years. Right, market is definitely coming here. It's not a debate. It never is, anyways. If you've been following our channel for a long time, long-term swing trades is what we are excellent in. Right, so this is where market, and you can see markets are coming, right? Markets have removed all demand. There's nothing to catch price anymore. Markets are falling, right? And these spikes here, right? We know for a fact that according to our module 2, if you've done my course, you also know that generally speaking, areas of value where banks are selling or buying need to get retested. So we get markets rallying up into this thing last month and this month, right? And in February, we missed it because I don't know, we were busy. Right, and in March, I can't even tell you, right? I was so obsessed with short-term trades, it's not even funny, right? So inside this, we've got a combination. We've got a Akini-Hashi giving us a higher order block, right? I'm gonna make it yellow first. This is from the Akini-Hashi candlesticks, right? I'm gonna really try and make it as visible as possible so you guys can see the yellow. I'm gonna make it crazy yellow. That yellow, all of that is that Akini-Hashi order block, right? And then we've got a normal candlesticks. We've got a bearish engulfing pattern, right? Confirming a much more lower order block. The Akini-Hashi order block has not yet been triggered, right? For the most part, it's this bearish engulfing pattern. Then markets came to retest it, and markets are dropping, right? So it hasn't come for a retest, but then markets created a new supply, right? So and that's kind of like the problem. The problem isn't in direction. The problem is getting a good entry and staying in it, right? And that's my first attempt, I guess. A couple of days ago, right, did not work out. Markets went a little bit higher, and I need to figure out why. 2 weeks ago, sorry, not this week, but the other week, right? So on the mayoral time frame, which is the weekly time frame, then you start to clear out some noise. For example, you've got a complete continuous retest of whatever that was. They complicated 365 candles with a beautiful imbalance, markets ranging for weeks on end, and then somewhere here is some type of area of competition. And the question is, what will it hold, right? Well, are markets done? Like, will markets ever come back this high? What does this mean? And if you switch to normal candlesticks and you start to make sense of it, you've got a bullish engulfing pattern, which is not, it's a trap, right? It's not a clean bullish engulfing pattern. In fact, it's a nothing really, right? It's just a strong green sentiment weak because of the war. This is not a bearish engulfing pattern, right? Markets did go down, but there's just a retest of an engulfment, right? Remember, you want to trade in the trend. The trend is what smart money is doing. Smart money is dropping price, whether you like it or not, in euro pound, green candle or not. I don't care how many of these happen. The trend is down. We are going down. This is non-negotiable. And so what happens is, personally, I feel like we get caught up with these strong weeks. We lose the plot. A big part of me does not want to find a sell here. I'll be honest. A big part of me wants to start hunting for sells a little bit up there. The problem with that part of me also knows that I run the risk of missing out on this drop. All right, this is how I make my money. I need to catch every pip in here. But the thing is, when is the takeoff? We know the plane is leaving, but is it leaving on Thursday or Friday? Right? Metaphorically speaking, not that markets move on Thursdays and Fridays. I'm just saying. All right, so on the daily time frame, we get to a situation like this where markets close on Friday with a bearish engulfing pattern. Now, naturally, for me, like a deer in headlights, right? I'm thinking, geez, we might get a retest of this area of value on Monday or Tuesday. So I won't lie, a big part of me when I was looking at this yesterday is very tempted to take a sell there when markets come back for a retest. And so that technically means, hopefully I would like to see price leave at least for a day and then make sure I put in a pending order. Right. But also that means then that, I have two choices. Targets on site, number one, break of market structure, which means markets could be trying to come equalize the low here. So this could be a good take profit. If we use the intraday technique that I teach people at 9 a.m. on why signal service providers of TP1, TP2, TP3, and how you always have to make sure that if you're going to have three entries, the three entries don't surpass your 5%. You're going to have to divide 0.8 with either three entries or two entries, so 0.4 here, 0.04, 0.04, or 0.01, 0.03, and 0.05 type of situation. Right, and TP1, you should definitely get out here in the equalizing platform. Equalizing zone, this low, the low at the beginning of March. And then the rest of them become your swings, right? And then where you're swinging to, once again, you're swinging to where banks are going, right? So this is quite a high risk place. Not high risk, but quite contagious. I'm not that confident in the markets. I will be, after price leaves a bit. It will take a little bit of time. But the second place that I'm very tempted to wait for in selling euro pound, like I said, is to wait to see if price will ever come back up here, where I had the white line previously. And that's for me fundamentally because I do believe there's going to be a big sweep in this market. I'm just adjusting all those weekly areas into daily. And you can see on the daily that, the highest supply inside the weekly, which was that Akini Hashi weekly, has been tested twice. You can see that, which makes this the next immediate area fresh value. All right. So here you run the risk of being stopped out. I don't want to lie to you. Here you're already selling high. All right. So you just run the risk of being a trader in the markets. Trading comes with risks in general, but the risk has nothing to do with any type of complete rule ignoring, right? So you can see that markets did try and do a sweep up here, and then markets fell through to break structure. I don't know if I would have drawn my area of value that big. It's not within my module 1 rules. Why module 1? Because it's not a bearish engulfing pattern, and so you need module 1 rules. Well, what does module 1 tell us? It tells that the area of value will be this big. And so you kind of like have to act accordingly. If you look to the left again, you don't have, man. Where does this thing end? I'm just trying to adjust this. Sorry, guys. I just want to show you how big the area of value is. There we go. It's something like that, right? So that for me is why I would really like to believe this area of value is fresh. It doesn't even have a wick. All right. So even if you wanted to wait all the way there, that's fine. But I'll tighten it quite a bit. Maybe have a look at it where this doji candle ends, right? Why did markets sit nicely here? 1, 2, 3, 4, right? Well, what were retail traders doing? So that's kind of like my mindset, right? So this kind of like wait to see where the chips land, right? If you're an intraday trader, you might get lucky. Look at this bearish engulfing pattern inside it, H4 time frame. Look at how markets struggled. Markets struggled to contain this. When you see a bearish engulfing pattern, this is the kind of reaction you want. This, not this. This is broken, right? So this has already been taken out inside that zone, right? It means there were a bunch of original sellers, and those original sellers have been snuffed out already, right? But inside the H4 for intraday time frame play is a little bit of action here, right? So maybe this war room is taking slower because I'm covering swing trades and intraday trades But intraday traders, seemingly since the war, really the markets have been yours, right? There's always volatility, there's always volume. And so, I've learned to kind of like just watch out for those levels right now. This we can't include anymore. It's been broken. It's been broken by that. That has got a really crappy imbalance for a trade idea, number one. But this one is clean. The problem with this sell for intraday setups on the smaller time frame is you really want to be made a believer. And to be made a believer, you want price to really remove structure. All right. So it hasn't yet, but maybe during the Asian session, you might get some action. And if you do get some action during the Asian session, and then in the London session, you might see price rally, or maybe on Monday or Tuesday, right? Then that's where you want to take your risk. But be very careful. Like I said, for me, fundamentally, there's a better swing sell setup all the way up there. All right. So that's what I'll be looking out for on Euro Pound. Right. Next, still want to sell it very bad. Euro Swiss franc, not even in the mood, man. Anything Swiss franc just irks me, especially when we have got 10 minutes left into our war room, right? So we're selling off at the gray zone, which we spoke about in whichever war room, chaguti, and that's been going on. Same setup, the one that I just showed you now on Euro Pound, but just on the monthly, where you had a bearish engulfing pattern tested, and then markets fell for the whole month of March. And then fell down really low. Then buyers started to push price back up there, which is normal. And I've taught you this, guys, many times, especially when you're trading indices, right? Just be careful, right? Market inefficiencies, generally speaking, need to get filled, right? So if this is a strong order block, which I think it is, and that needs to get filled, which I think it will, then you're looking at that. Granted, euro right now is on the rise, right? It's trying to be strong, but as long as things are bad, Swiss franc remains a safe haven, so it would be technically stronger, right? So that's why it's been very difficult to buy euro Swiss franc profitably. For the most part, for the longest of times, just so we're all clear, April last year, price has been falling, and we know that there's a lot of room in this chart to fall. Ever since this demand was taken out, it became crystal clear there is a lot of room, right? We could actually be looking at the journey towards a new major turning point demand, which is a big deal for charts, right? But if we start to drill down to our previous war room area, those of you who took it, you'll see on the weekly time frame, they've simply just triggered you in. And on Friday, you'd have started moving towards the journey of profits, right? Now, it's too early to lock profits with Euro Swiss franc. The only reason why I'm bringing it up here is because I don't really ever get around to covering it in our morning sessions. It's always asset number 8, and we're always out of time by the time we're done with the first 6 or something, right? But be mindful, it's a bearish engulfing pattern, good for you, but it still needs to get tested, right? So you really want to see some strong signs. Talitha area, this is pretty, man. This is good money, right? But we drew this for a reason. So let's just tighten this up a bit, and let's straight across, right? So this is why, I don't like this, right? Granted, nothing engulfed, and this was quite a sharp price spark, right? So all price did was fail, in my humble opinion, to fill a gap. This gap is what worries me. Markets, to me, seem to have stopped somewhere here. So there's still a gap there, right up there, right? So that's why I'm thinking, I personally would rather turn this into a short-term intraday trade. Not intraday, short-term swing trade, right? We're already in. I was in like on Wednesday or something, or Thursday, I can't remember. But whichever day you got triggered in, for the most part, we were red. It's only like Friday when price started to drop, right? But for me, it's too early to lock profits, but it's very, very important to reduce risks. Why? There's a gap there, right? So markets could free fall, but only come back to fill the gap. So I would start to prepare, right? What did I say about gaps? You always want a supply or a demand below or above the gap. So if I go to the 2-hour time frame, you will notice that the gray zone, which I'm going to now make yellow, is the better supply. Out of all these areas of value, this is the better supply. So you want to do both. You want to either make money on the trade that you're in now, for those of you who are in Euro Swiss franc, all right? Or you want to make some type of money, but you also want to better prepare for this one. So my entry points for this one. I haven't set this one yet, but I think it's now time. Now that we now know that price completely failed to fill the gap. We spoke about this last week, or I don't know when, but I know I've spoken to people about this. Maybe during the morning sessions, maybe I'm losing my mind now, but it's definitely been done. So I'm going to remove the gray bigger area of value, and then I'm going to assume that those of you who are in, you want to move your stop loss for your current sell just above here. So you don't want to take the entire hit, all right? That's how I think. Or you want to keep it as a long-term swing trade. So you want to move your supply, at least not out there, but in here, right? Just above this supply, which would imply that all the profits you've made right now, you're willing to currently lose them just so you can get a deeper run in price. So you're okay watching those profits disappear. You're okay watching price retrace. And I know a lot of retail traders are not good with that, right? So, it's not really an A-class recommendation, right? So this is what I would personally do. I would find a way to lock profits or get out of trade one that we're currently in right now. And a good place, it might not be the ideal area of value when you enter the swing trade. I do understand that. Because remember, when you enter the swing trade, your area of value is a little bit bigger. Because it's bigger, the risk to reward area is bigger. So remember, you'd probably be risking this. You'd have entered somewhere down here. I don't know. I just want to quickly get it right. So we got triggered somewhere down there. Let's go back. Are we on the 1 hour or something? I don't know what we're on. What are we on, guys? Are we on the 15 minutes, 2 hours? Okay, this is good enough. This is good enough, right? So you'd have probably entered somewhere here, right, where we mark thing in markets, but the problem is your stop loss for the current trade we're in, because it was a swing trade, was quite wide, right? So that's why I'm saying this take profit area is not the most ideal, but it's better than losing money, right? So I'll definitely exit somewhere here, or lock profits, right? You don't have to exit. You can always just simply lock profits. We could break even, for crying out loud, and then moving forward, then start to tell yourself, Kenya, Joy, good to see you. Thank you, Kenya. I love Kenya. And I think Kenya loves 365 and 365 loves Kenya. It's a beautiful, beautiful, and it's definitely on my to-do list to actually physically come there. Yes, man, busy. Right. Then this is what I would look out for as an intraday trader. This area of value is, to me, smells like a bear trap, folks. I must say, as long as this gap here between these 2 points is not yet filled, anything below that gap is a big trap, right? So this is a good area of value to take another intraday trade if market's going to come play with you here, but just be mindful of that, right? And remember, if you take a trade here, you would be stuck with the same dilemma we're trying to get out of in trade number one. You would have to have your stop loss outside, very far away, because price is allowed to fill the gaps, right? But definitely make sure you've got a nice clean pending order just below the supply, right? And get triggered on the fill, right? For me, long term, Euro Swiss franc has to be weak or will be weak. So this is definitely going to happen, right? And then we'll start to take it level by level, all right? Level by level, right? We shall see. Right, that's Euro Swiss franc. Our next asset for tonight. I'm looking at the time. I promise you, I understand. We're looking at time. EURNZD. We're actually out of time. Our war rooms are normally 2 hours. But then I start talking too much and teaching instead of just giving out signals, and then markets move. Right, we just looked at a price chart that looks exactly like this. You mean this is March 2020? Does anyone remember? Anyone paying attention enough? Because there's another thing about traders is traders always think they are facing a new market all the time. I'll just wait for exactly 10 seconds and then I'll move on. Does anyone remember seeing a chart that looks like this? We just did. It doesn't have to look exact, but it's very similar. I had trend lines all over it. It's another euro chart, and you had a small cowboy lot size. I'm bringing this up because if you don't see these patterns, if you're not paying attention to this thing, and it's not supposed to happen overnight. I've been doing this for years, but over time, you absolutely have to start seeing which markets correlate very well with each other. All right. So if I do this here, my 10 seconds is up, no one has responded, and I split it. If I was to split my screen right now, I can't. I'm still live on my office computer. But if I split my screen, this literally looks like Euro AUD. Oops. What did I do? Right. This is literally Euro AUD chart that we did about 2 price charts ago. Right, there it is, price falling from March 2020, 2 red candles after a big touch, and markets falling down to a new demand. Euro NZD. And why is that? Because AUD and NZD are literally same session assets. Number one, we pretty much call AUD and NZD cousins. So their chart patterns against the majors is always very similarly the same. Right, so we've got the exact same chart. We've already got a tick here where we think price is going to come, stop at, and rest it. So until markets get there, we should only be looking for sell setups. Ah, there we go, Alvin. Thank you. I didn't see your comment, man. Euro AUD, fantastic. Yeah. Right, so this is just simple. So you've got a clean Euro AUD profitable idea. 9 out of 10 times you have a clean Euro NZD profitable idea. You clean AUD USD, you've got a clean NZD USD. It kind of like works like that. You clean Euro USD, clean Pound USD, etc., etc. Right, so you know, a similar thing. I was not in this one, unfortunately. I only caught Euro AUD, even though I'm preaching of these correlations. But you know, at the time, I guess I missed it, or margin, I don't know. But it did the exact same thing, right? And so now we're trying to figure out what to do. To me, you know, the message is clear: is to sell. What I find interesting about Euro AUD, just like Euro NZD, is the fact that markets are reacting to something here. I mean, we could try to attempt to draw some trend lines, although I don't think, you know, there wouldn't be the cleanest trend lines, and you'd have to justify it according to market structure. Trend lines should never be based on how you feel. Trend lines are drawn based on higher highs and lower lows. So the first point of the trend line should be somewhere there. First touch. I've seen some weird trend lines, you know, on social media. Trend lines are not based on what you see or how you feel, or what works best for your strategy. All a trend line should do is to just simply confirm where markets decided to move adjacent. This is Mr. Kakoma's flip zone. I have no idea if he's with us today, but here is a nice flip zone. A demand that was later on converted into a supply because of the dominance of sellers in the zone, right? Not a support and resistance level. Very different from that kind of stuff. Right, so we've got the situation here. By the way, if you're new, we do not trade like retail traders. We don't use their strategies because we like our capital and we don't like to lose unnecessarily in the markets. If we're losing, let us lose because we're still working on our psychology in our journey, but we're not falling for traps in the markets. We understand a long-term perspective of price is what governs price direction. Right, so there we go. We've got a break of market structure, not a bearish engulfing pattern on the weekly time frame, but nonetheless, everything like Euro AUD, guys. Just look at this 1, 2, 3 pattern. Let's go to Euro AUD. I mean, I'm just pulling this off memory, but I'm doing it like so you can see. This is Euro AUD on the weekly. Look at that. Same trade call, right? Better sells at the top, but the intraday sells are somewhere here. Break of market structure. It's the same stuff, right? So all we are waiting for is for banks to move that stuff. Hey, Kakoma is here. Good to see you, brother. Good to see you. Right. So we've got a similar situation here. Banks break demand, markets move in. Let's go to daily now and start to see what we think. Right. So you can see inside this weekly area, I've marked the zone. When I do that, just know I'm shouting confluence to myself. I'm like, Leroy, if you're ever to risk some money, there's a good place to risk some money, right? There's a good place to risk some money because the daily supply and a weekly supply, which is strength, confluence for a currency. If we do our swing low, swing high, why do we do that? It's the only time we can rightfully and correctly draw a Fibonacci. It doesn't matter what your Forex profit gurus say. You need structure to do most of the stuff. So we've got to swing high, swing low, then we start to get our confirmation. We've got a golden ratio confirmation with an order block, right? It's a one-hit wonder order block. So you want to be generous with your area of competition, knowing that it's a low volume area. It's a PCP, so we're not surprised, right? But for the most part, if gun to my head, someone came to me at midnight and told me I have to choose one place to risk money on Euro NZD, the only place that I'll choose is here. Obviously here and then even higher, right? Higher, obviously 100% better. But I would definitely assume, right, that there are two strong containing areas of value. The reason why I'll take the first one is only because my Fibonacci is kind of telling me everything is okay, right? Or not that. My Fibonacci rather is telling me that you're more than welcome to try and take a long-term risk here, because it is a good place for retracement. Even us, the banks, will be looking for a retracement zone there. Even us traders will be looking for a good retracement zone here. Right, so that's the play on EURNZD. Let it fill out for some lows. I'm not gonna be looking for lows, and because I don't really know where the lows are or when the lows will come, I'll not be in any buys. I'll be surprised with you when markets start to rally, and I'll hope to sell everything back down, right? Hope to sell everything back down. This is definitely for me a swing trade idea for the books. Definitely. I mean, I really don't want to, because all these Euro pairs have to catch up with Euro USD. All right, it's rebounding. This is quite a big area of value, so just trade and risk wisely. This is much, much, much better. Quite big, man. Quite big zones, right? So maybe if you've got a small account, let me quickly help you. We're going to move to the H4 time frame, and then we're going to be looking for fresh zones in the H4 time frame, right? So this is a whole daily zone, and this is what you want to do. My kid, grade 2, they do number sense. I don't know what it is. Anyways, it's a silly story. The point is, he cancels out things that he's done in his book. So if he's counted how many heads and eyes make 600 multiple, teaching them how to count in bonds, he actually takes a pencil, and his work is so untied and he cancels out. But I get why he's doing it. He's telling his brain, I don't have to worry about any of these supplies because they're no longer fresh. Well, he's working on number sense, right? Numbers. You need to do the same thing in your trading. You need to tell your brain which areas of value have been tagged, which areas of value have no use to you. Let me just quickly fix my rectangle so that they don't go to the extended right. There we go. Right. And why is that? Because you actually want to know that there was a supply here. It was drained. Markets came back and drained this one. Then this got drained. And so when you really look at it, when it really comes down to it, inside the daily area of value, out of all areas of value inside it on the H4 time frame, this is the only area that's fresh. If you have a small account, you don't want to swing like Leroy. You don't want, I remember when we had people joining our academy, I'd send them a voice note when we're still on WhatsApp and tell them that I'm not your target. If you want to join the academy, it's not me. I'm not your next thing. Not that I'm better than you or whatever. It's just that the way I trade now is so different from the way you need to trade. Number one, our capital is different, right? Signal service providers don't tell you that this stuff is important. They just give you signals. Then that's why sometimes they make money and you don't, right? Because your capital is different, but also their waiting game is different. Now, I'm telling you now, I can swallow all of this, but you might not be able to, right? To avoid margin call, you want to get the confluent area of value inside the daily. So you have to clean your areas out. So that's all there is on that higher supply. That's the only place where I would make a move if I was in your shoes, and I will be in your shoes. I would only want to sell here. Now, if you wanted protection in the event that you feel like, well, what if smart money tries to go hunting, go shopping for some liquidity, right? Well, we can talk about that later. But at least your stop loss placement, if it's outside the daily this time, it wouldn't be almost 200 pips, right, from there to there. It'll be better, right? But I would, if I have a small account, rather take a loss here and then move on with my life than subjugate my entire capital to all of this. So that's the highest supply there. And then in here, can't see much. I would kind of rock with this, kind of let it be, but there is this here. The thing is, the problem is there was in the middle of it, there was a doji candle, and that indecision actually allowed the buyers to push up to the upside, which actually triggered whatever was going on, on the left here, which then this downfall becomes a question of, is this a fresh area of value or is it a reaction area of value? But technically speaking, if you were to cover the whole area, if you just couldn't come up with a conclusive answer like me, could go down a little bit lower, but I don't think it will change much. So on the 2-hour time frame, on the 2-hour time frame. So now it's starting to become even much more clearer, right? But it doesn't change anything. We got a bearish engulfing pattern that price reacts to, and then markets come back into, right? So you can say, well, markets didn't make it all the way up there. But again, you know, if you draw the area of competition for the bearish engulfing pattern, which is the wick of this green candle, I hope I'm making sense. If you guys, please do take the course, man, because some of these things, it's difficult to explain when we only have 2 hours together, right? Everything is in the course, everything, supply and demand, institutional trading, yada, 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 yada. You can pay with payment plans. Right, so all of this stuff is kind of like solid, right? Markets have made a retest of the same zone here, and then they did give out an imbalance, right? So you could risk it there. And there's also this at Heaven's Door, right? And that's the only thing that's fresh, right? Before competing with all those levels there, right? Then we go back to the daily, and I'll show you what it looks like. Let's remove the pip count. Right, so if you come to the daily, you will see this is what it looks like. So you've got that new fresh zone here, right, on the 2-hour time frame. But at the end of the day, you might as well just wait just above it and get triggered with the daily. This whole zone here inside is also H4. But once again, at the end of the day, you're going to put your stop loss outside the H4 zone, which means you're covering the daily, right? So that's why I would wait for that. It's a little bit different when you look at this. When you look at this zone, then just the gray is more than enough, right? Just make sure you get a good area of competition. And yeah, I would reduce even my entire daily area to match that H4 stop loss, right? So that's what I'm looking at EURNZD. I hope that makes sense to everyone. Ladies and gentlemen, you know, it's up to you if you want me to keep going, but I do have to go. Supper time, you know, bedtime stories, tucking kids in. You know, tomorrow is a public holiday. Do enjoy it. I will be working. So 9 a.m. tomorrow, London session, I will be live again. My team will upload the Bitcoin video that I did, Bitcoin modeling, a little bit of teaching, a little bit of understanding. So wealth in 3 years, please. I hope you haven't spent your money. Time to dollar cost average, not into Bitcoin, right? But I was looking at the health of the crypto market. There's something weird going on. And the thing that's weird about crypto right now is that it's largely a debatable space, right? Until we get a clear understanding. I think my son is back on the PlayStation playing games. Why is my internet slow? All right, so I was going to show you CoinGecko, but just be very careful. Whatever you do on the crypto markets, you know, it depends who you are and your ability to wait. All right, crypto markets right now is for two types of people. Patient people, all right, very patient people. You guys can see my sell area, right? You know, I ended up taking half profits on that sell because markets returned back here, but markets haven't come back up to stop me out, and you know, I don't think I'm going to allow them to because I've broken even anyways. But markets are struggling for a reason. But the reason isn't as clean as we're going to go down, right? Markets are ranging. This is an accumulation phase. And while we liquidate short-term holders, we need to be aware that whales are generally people who use crypto to store wealth and value. They don't use it to buy houses or a new car or look fancy. They use it to store wealth and value. That means they have no problem, none whatsoever, keeping markets like this for a while. Now, bearing in mind, I mean, I don't want to rock your world and start to talk when I just said, you know, class is over. But you know, we've got two time frames to study. We can study the 2008 crash in the financial markets for the stock market, which I've been doing during our podcast times, and I apologize. All right, but it had to be done because a lot of the things that I do for free podcast, war rooms, London sessions, I can't forget that I'm running an entire institution as well with my investors, right? So I can't poison the food on my table, right? But the podcast is so important. I promise you, it's one of the most important things I've ever done with my time. So it's definitely coming back. It's just that with the war, I had to go back and study the markets. And for equities, currencies, you want to look at 2008, but you don't want to get stuck there. You don't want to get stuck in 2008. The financial crisis we're dealing with is a little bit different from 2008. I think you need to look at the Great Depression. You look at the markets back then, and nobody wants to go through archives because you can't find that stuff on TradeView. Even Saxo doesn't go all the way back to the 1930s sometimes, right? Even on the pro accounts on TradeView. Right, so I had to go through archives and the Bloomberg server, and that was expensive and costly, but it was beautiful information. But if I come to Bitcoin here and I look at the 2018 crash, and I go to the weekly time frame to look at the 2018 crash, right? You'll notice, right? Papa plays with you for a bit. He'll range for a couple of weeks. And the reason for that is I find that there's a lot of making peace of what's what in the markets. And eventually when that situation is clear, and remember, I'm bringing this up because I am that idiot who wants price to go down before going up, right? Remember, everyone else in the markets wants to go to the moon, and I'm like, yeah, why? What's the rush, right? Remember, we came here, I told you guys, time to buy in March, and generally speaking, we never miss, right? And all these order blocks along the way were secured and tested until all of a sudden, markets stopped. Markets started to create these flag patterns and rallying without testing stuff. Every time markets do that, they know that retail traders' memories is like a mosquito. Your mosquito will come to your ear while you're asleep. You'll use your hands, you scare it away, and the mosquito will disappear. Just as you're about to fall asleep, 10 minutes later, boom, the mosquito is back. The mosquito is forgotten. And retail traders trade and invest like mosquitoes. They forget. And because markets never freaking forget, ever. This range, when it comes to an end, something big is going to happen. An upward push is what we all want to pray for our portfolios, but a downward push is what we all want to pray for if we want to be extremely wealthy in the next 10 years. And I want to be extremely wealthy, not because I love money, but because I can only affect and change the world with money. I can build more schools with money. I can do more free time things on the YouTube channel if I have all the money that I need in the world. And I fundamentally believe that, if 30K is at play, 20K is definitely at play, but I explain why. But I also explain why my analysis could be wrong, right? We've got a very weak bullish engulfing pattern on how markets ended this week. All right. So every time markets kill these massive wicks where market inefficiencies, and this market inefficiency was filled this Friday, right, with a bullish engulfing candle. You'll see Nasdaq, all your equities did very well. So that's quite an interesting to look out for, right? There's this box, but this all looks like a big PCP of what? Of a downtrend, right? Until we break above this neck area, until we breach 50,000 US dollars. Don't tell me we're going back to the moon yet, right? And this retest of this bullish engulfing pattern could be it could scare retail traders, right? Those of them who started buying already, and I saw some people are buying already, right? So look out for that, right? We've got an H4 supply. Literally, the boss of Bitcoin right now is an overly tested H4 supply. Look at that, beautiful, right? You remember the first sell we took? I locked my stop loss here. I showed you guys a snapshot of my real account. It's somewhere on our social media page, and this supply has done well. This is the same supply that was created when we thought Helen was being positive about crypto, then crypto fell. Crypto is back again on good news of what Powell said with the interest rates, and now the supply is still holding. I would think the supply is weak. Pleasantly surprised it's holding for my micro thesis, right? But yeah, time will tell. But again, forget about Bitcoin. You know what I want to do, by the way, for the 7th of you here? I always forget. I should bookmark it. But I was here recently. Okay, I'll announce it tomorrow. But anyways, I'm gonna offer live trading on crypto markets. I've found a perfect broker for it, FTX or something. Yeah, there we go. So I've created a wallet. And what's gonna happen is it's gonna be absolutely free as long as you're a student. And we're gonna be trading these things live, and we're gonna open it up to the public, right? But I'm gonna show you how to make tons of money here, right? So I created this, I think, under my partner's name. Probably should go tell her that she now has a new crypto wallet. So I'm going to fund this. And why FTX? Well, FTX is I trust the founder. I've looked up the company. It's done very well. I'll post a link for those of you who want to start an account, but I'm only going to do this, guys, in April. All right, I don't want to overtake up too many things, but what we're going to do first of all, before it even reaches YouTube, right? So for 365 students, I want you to know there's going to be a video on every single thing you're looking at here. I'm going to back test every one of these buggers, and the way me and my team have worked it out is I can almost do 3 a day as long as I keep it under 2 hours, right? So 3 currency pairs a day. This is going to go, so we're going to create a private chat, well, within the same channel, but most of those videos will be private on the YouTube channel for students only. And then we're going to, after we back test all of them throughout the month of April to make sure our strategy is profound, I'm going to show you how $100 can become something ridiculous. Right? There's a lot of money here, guys. There's a lot of low cap things here. There's a lot of things that are so down because of Bitcoin that are so tradable, both up and down. It's hundreds and hundreds of beautiful assets, right? I've got an FTX account under my name. The reason why I don't want to use it is because I use that for strong swings. But yeah, I've put one under my partner's name. I'm going to fund it with maybe $100, $200, something small, and then we're going to start to build. But first, we want to back test. We want to back test this thing. So I'll send the link. I'll put the link in the description box. But just check the video tomorrow, man. I'm going to go have supper now. First, we back test thoroughly because we don't want to waste money. And when we back test, we want to take all crypto assets with an 85% win rate via back testing our strategy, and we want to trade them. You'll be surprised. You will be surprised on the type of money you can make here, right? But that's my plan for the rest of the year when it comes to crypto. I really want to commit to trading it a lot. I normally just invest, but geez, there's a lot of money in trading as well. All right, 365, everybody, shake my hand. I appreciate you. Thank you so much for tuning in. See those of you during the week, and have yourselves a lovely day. Thank you, everybody. Shake my hand. Thank you. I'm literally about to end the live stream. I appreciate you all. I appreciate you all. Take special care. Goodbye.